Garcia, go.
Yep, I'm an engineer by background, and we've been working together since 2017. The initial version of our business was Paracore Consulting, which was more of a traditional consultative approach to the R&D tax credit. But we have since moved into R&D tax credit software space with TaxRobot, and we're really excited to work with all of you these upcoming years and get everybody a lot of money here. So go ahead and get started.
Absolutely. So who's familiar with the research and development tax credit? Show of hands here. Okay, a few people are familiar with the R&D tax credit. Okay, and then show of hands, who in the room is familiar with the employee retention credit? ERC? Okay, more people there. So if you are familiar with the employee retention credit, you will love the R&D tax credit. Now, not as many people are going to qualify for the R&D tax credit that qualify for the employee retention credit. But the good thing about the R&D tax credit is it is renewable. That means every single year, that company, that business can claim the R&D tax credit, which means residual income for you that are referring that business in for those companies that are claiming the R&D tax credit. So that is the advantage, that you can refer a client and you can get that residual income coming in for the R&D tax credit because it is a renewable credit here. So here's the roadmap that we're going to go over here. The entire presentation is focused around how do we identify those R&D tax credit clients and what makes them qualified and how do we bring them in. So we're going to start with what is the R&D tax credit, some of the activities that qualify for the tax credit, some of those expenses, industries, and we'll end with some misconceptions about the tax credit. We'll answer some questions and then we'll have you back to your day here. So without further ado, let's dive into it here. So the R&D tax credit, what is it? It was created in the Economic Recovery Act of 1981. And basically at that point in time, the government started to see that all of these scientific jobs, all of these technical jobs were being outsourced outside of the US. Obviously, we don't like that. We want all of those jobs and all of that innovation and all of that activity to stay within the US. So they said, hey, here's what we're going to do. If you keep all of that activity inside the United States, you get a tax credit. And that's how the R&D tax credit was born. Basically rewarding people for investing in innovation and research within the US. And the whole purpose of that is to spur the economy here. We give tax credits to those businesses that are keeping these innovative jobs within the US. They're going to reinvest that back into the business. They're going to hire more employees. They're going to grow their business, which has a snowball effect of increasing those jobs and spurring the economy there. So what are the different ways that you can use the R&D tax credit? And this is an important one to speak with your clients about as well, because there's two different ways that you can utilize the R&D tax credit. Now, the first is going to be against your federal income tax. You have federal income tax, $10,000 of federal income tax, you have a $10,000 R&D tax credit, you don't pay anything in taxes, right? Pretty simple. Dollar for dollar reduction in your federal income tax liability. Now there are some startup companies, less than 5 years old, making less than $5 million in gross receipts. Some people are in losses. So your client says, hey, how am I going to utilize a tax credit when I'm not paying any taxes? Well, if they're a young company, less than 5 years old, making less than $5 million, and they're in losses, well, ask them if they have W-2 employees. Say, hey, you're not paying any federal income tax. Do you have W-2 employees? They say, yes, I have W-2 employees. Well, they are paying payroll taxes on those W-2 employees. R&D tax credit is one of the few tax credits you can utilize against those payroll taxes, even if you're in losses and even if you're not paying any federal income tax. So very, very powerful tax credit, even if you're in losses and you're not paying any taxes there. So always make sure to consult with any business that you're thinking about referring there, even if they're not paying any taxes. Remember, 5 and 5, less than 5 years of having those gross receipts, making less than $5 million in gross receipts as well. Now, as far as utilizing the credit here as well, there's a couple of different ways you can utilize it. Let's say that they're not a startup company, right? And we deliver this company, let's say it's $100,000 in an R&D tax credit. They're only paying $50,000 in taxes there. So they're going to get that $50,000 back. You know, they're going to wipe out all of their taxes. Then they have this extra $50,000. You know, they have more tax credit than they were paying in taxes. What happens with that? All right, we can carry that tax credit backward for 1 year first. So we can say, hey, we can go back to your 2021 tax return. Were you paying taxes there? All right, that extra $50,000, we can go back and get you a refund check for that previous year. And then if there's any left over after that, you can actually carry that tax credit on your books for 20 years forward into the future. So even if they're paying a small amount of tax, we can say, hey, don't worry, you can carry that on your books for up to 20 years in the future. So very powerful way that we can utilize the tax credit there.
So Uche, a quick question for you on the carry forward. You know, say for instance a business can't use it right away. Can they actually use it to offset their estimated tax payments that year if they're going to run a profit?
Absolutely. And that's another way you can utilize it as well. If you do have that on the books there, you can utilize that against your estimated tax payments. And that's very good when you're doing tax planning and you're figuring out how much money that you want to send in. You can offset those estimated tax payments there. All right, qualifying activities. Basically, developing a new or improved product, process, formula, invention, software, or technique. So basically, we want people to be undertaking new activities here. For example, here, let's say that somebody is a software developer and they're creating a new piece of software. That is a new product. For example, let's say that they are in architecture, engineering, or construction, and they're developing new activities in their trade or new processes for accomplishing the work that they're doing. That could be a process that they're working on. That could be a technique that they're working on. There could be a manufacturer that's developing a new product that also qualifies. I have a question over here.
Yeah, what if it's a company that does something and they also have a part of their company that does software development? So like an example, insurance brokerage shop that's creating their own platform for technology for a drip campaign system, for example.
Absolutely.
Is that something that would qualify that aspect of it for the whole company, even though it's not their, it's just one aspect of what they do?
Yeah, that's a great question there. And we're going to get into the type of expenses that qualify after this, but there's two parts to qualifying. Does the activity qualify? Creating that software, yes, that activity qualifies, which means the company qualifies, but that doesn't mean that all of the expenses for the business will qualify. Only the expenses that are attached to that one project there that qualifies. So when we go into the expenses here on the next slide, I'll explain how those different expenses play into the calculation there. Go ahead.
But the FICA checks for all of the company would qualify.
Yes, so the taxes that the company is paying, like say their federal income tax liability is $50,000, yes, all of those taxes
The
you
payroll
can
tax.
offset.
The payroll tax for all of the company would
Exactly.
be, not just the division that does the
Exactly.
research, correct?
Correct. All of your payroll taxes. Correct.
Very big.
Another question here.
I wonder if it's, I thought you could go back 3 years to see if they qualify.
Absolutely, you can go back 3 years. So
Okay, so it's not, once they get the credit, we can go back, but to find out, because they didn't know about it.
absolutely. Exactly. So for right now, what we're discussing over here is doing amended tax returns. So you can claim the R&D tax credit on an originally filed return or an amended tax return. And typically we can amend 3 years on federal and 3 or 4 years on the state end. So let's say we're working with a client right now that's never claimed the R&D tax credit before. We can say, okay, your current year right now, 2022, and we're about to get ready to file 2023 tax returns. We can take a look at an R&D tax credit for those years, but we can also go back 3 years. So we can also take a look at 2021 and 2020. 2019 just closed there. So we can go back and we can amend those tax returns as well. You're absolutely correct. And if they did have a tax credit in those years, they can potentially get a refund. The government will send them out a check for those previous years when they amend those tax returns there.
Uche, will you explain to the group why 3 years?
So 3 year period is the statute of limitations to amend a tax return. So it's 3 years from whenever you filed that tax return there. So you can go back for those 3 years because you can still open that year for the tax return. And then like I mentioned, in some states, California, for example, you can go back 4 years on the state tax return. And do want to mention that now that we're on the topic as well, this is not just a federal tax credit as well. You have the federal tax credit, and there's also 36 states that offer a state level tax credit as well. So you can claim that tax credit against federal, and then you have a tax credit that you can claim against your state taxes as well. So it is both. You don't have to choose one or the other. So any of the clients in those 36 states that are paying state tax credits, state taxes, this credit is even more powerful for them. And we can let you know those states as well. We have a wealth of resources on our website there, taxrobot.com. You go on there, you click state tax credits. We have a map that will show you all of the different states that qualify, for the R&D tax credit there. And some of those states have a really advantageous tax credit there on the state level. California, Utah, Arizona, Wisconsin, for example, are really good with the state tax credit.
Just kind of an FYI, for anyone who lives in a state where you don't pay taxes, they may have a pool for R&D funds, like for example Texas. My family comes from Texas, and we don't have.
So the thing about Texas, you can still claim an R&D tax credit in Texas. What it goes against is you can utilize it against half of your Texas franchise tax.
Okay.
So that's how the Texas tax credit is utilized.
Okay.
Thanks for that answer, Uche. So with that, I'm just gonna interject a little because as sometimes we're talking about tax planning, and then sometimes you may wonder, why is it we ask you to get your clients' last 3 years taxes? It's just like what Uche says. If we go back 4 years, it doesn't make a difference because the statute of limitation is, there's a double standard for the IRS. They are not gonna give you any refund if it was due prior to the 3 years. But if you owe them 10 years,
Oh, they definitely still want that.
just let you know that.
They want it.
Know that, all right?
Oh, they definitely still want that. Go ahead.
So if we find a company that qualifies for R&D, but they don't have tax problems because they're working with Hubert, they're working with Ed to eliminate that bankable R&D tax credit goes forward 20. Is that considered an asset on the books? So when they go to sell that business, they can sell for more?
Absolutely, and we have seen that be the case as well. We have worked with certain companies that are going, to sell their business, and obviously, depends on how the business is organized and what structure it is, especially if it is a C corp.
Right.
For example, for a C corp, it is going to stay on the books. For an S corp, it's a little bit different because that's a pass-through entity and it is attached to that person. But if it's a C corp, absolutely, we've worked with some companies that are like, hey, we're going to claim the R&D tax credit. We're going to put that on our books because that's going to increase the valuation of our business there going forward there. So that is something that you can definitely do there.
So you have a lot of plants in the audience. Did you pay them? To answer
Your checks will be in the mail.
Just do it back there.
Sorry, man.
We're in December, what's the deadline for going back?
Going back 3 years, so it's 3 years from when you filed that tax return. So 2019, if you filed your tax return for 2019, spring of 2020, so 2021, 2022, 2023. If you filed timely, the statute of limitations ended in spring of this year. If you extended that tax return for 2019, your statute of limitations just ran either September or October of this year here. So that's when it ends. 3 years from when you filed. If you filed in the spring, 3 years from the time that you filed in the spring. If you filed in the fall, it's actually whenever you actually filed the tax return after the extension.
And as of this current date right now, 2020 is guaranteed to be open.
Yes.
Right now.
So 2020 at the very least is open for all taxpayers. So 2020, 2021, and 2022, you're definitely going to want to collect those tax returns from your clients here to take a look at that.
So if you lived in one of those counties in Mississippi that was affected by the salty backwash on the river and you didn't have to file your 22 return until February 15th of 2024, you've got until 2027
You get a
Okay.
little bit. You get a little bit of extra time. You know, thankfully there.
But you gotta live in one of those counties.
Absolutely.
So to answer the question about the plants in the room, alright, what you may not have realized because we may not have phrased it this way, we're so personally, and the team at Excel and Remap, we're so excited that Uche and Chris are here because what is happening is that what they're doing is a perfect extension, a direct extension of the CTBA program. Some of you, we did it in August, we did it in October, and some of you may have forgotten. But what we are hoping that we don't want one of you to think, well, I just love R&D, I'm gonna do R&D. Because we saw that, and that's why we created the CTBA program, because a lot of you were just doing ERC. You got excited about ERC, and you forgot the 15, 20 other things we can do. Listen to what Uche says. Here's a task. If you can carry the credit forward 20 years, it is imperative that you're doing tax planning, because if you can carry it forward 20 years, but yet still your focus that, oh, you're just gonna do an acceleration of your depreciation. 1 year, the depreciation may not be necessary. 1 year, the R&D credit may not be necessary. So it's important. I'm plugging tax planning. Guys, you need to, for your clients who's gonna say, I was speaking with someone earlier, the challenge he's having, the guys don't wanna let go of their previous CPAs. Hey, if your previous CPA is not helping you, or the guy's telling you, oh, you make a lot of money, you just have to pay $100,000 tax. Yeah, right. Then you have a personal question you have to ask yourself. Do you love that guy more than the 100,000? And if you have doubt about that, you have that discussion with your wife or your husband if you're married, and then the husband, then that's gonna be a deeper discussion that you love the CPA more than the 100,000 you can get for your spouse. I'm just saying.
Yeah.
So what I told my clients, look, if you love him that much, we're gonna save you 100. Just pay him. Your CPA.
And you know, to that point, the different ways that factors into the tax planning as well, and being a very powerful strategy. I've mentioned also AMT. Using the R&D tax credit against AMT as well. For a lot of different individuals, they are going to reduce their taxes with a lot of different tax planning methods and tax reduction methods, but you have your alternative minimum tax, this bar that you hit where the government is saying, hey, beyond this point, you can't reduce your taxes anymore. You have to pay this minimum amount of tax. The R&D tax credit is one of the few tax credits where you can take that bar and you can reduce it below AMT as well. So, very important to talk with your clients about that. Even if they use all of these other, tax reduction methods, you can get to that bar and reduce it even more, with the R&D tax credit. And that was something new that was just developed with the PATH Act in 2016, being able to use the R&D tax credit to offset alternative minimum tax.
I assume you guys are gonna bring that up. Hopefully we're gonna go into the process of this, so that we don't have to memorize all that. Or is Hubert gonna do that, or are you?
Yeah, at the end we're gonna talk to you, about the process that we'd like to do this. Essentially, we're going to have you have an initial discussion with Seville, and then Seville is going to communicate with us. But we'll go over that, here at the end of the presentation.
Here.
How we want to,
We've
how we want to
only
bring
gotten
all of
through one slide
that
and
business
it's been
in
30
here.
minutes. you guys must like it so far.
No, we love the questions, so feel free.
Yeah.
Any additional questions anybody has, feel free to stop us at any point in time here. All right, so let's get into the expenses that we were talking about. Okay, what type of different expenses are we talking about? So your software example there. So we're saying, okay, they qualify for the R&D tax credit. They're creating this software. It's new, it's innovative, it qualifies for the R&D tax credit. How do we determine what expenses are qualified? Okay, so for example, they might be paying wages to their employees. Who designed the software? Who engineered the software? Who tested the software? We can take those wages of those employees and we can include that in the tax credit. Number 2 here, supplies utilized in R&D. Are they a manufacturer? Are they creating, prototypes? Are they creating first run productions of new and different products? Are they improving a product? What type of supply expenses went to improving that product? After they improved the product, when they did that first run, how much in expenses went into those? Supply expenses for manufacturers. Contract research expenditures. Similar to the wages paid to employees, this is W-2 and wages. They have W-2 employees. Are they using 1099s? Are they using independent contractors? What type of wages are they, or what type of expenses are they paying to those 1099 contractors? Those can go into the R&D tax credit as well. And then lastly, cloud computer expenses there. Like we mentioned with the software developer, are they using Amazon, AWS, Microsoft, Azure, all of these, cloud computing online systems? What expenses are going into that? Basically, we're going to add up all of these different expenses. We're going to see what percentage of those expenses qualify. And then our clients can get up to 10% of those expenses back in the form of an R&D tax credit here. So very powerful tax credit here. And this is something that you can start bringing up to your clients as well when you're speaking with them. Okay, how many employees do you have on staff? Are you using materials if you're manufacturing a product? Do you have any 1099 employees and all of that? The biggest thing to make sure, like we mentioned at the beginning of the presentation here, this is a tax credit for keeping all of this within the US. All of this has to be located within the US. The W-2 employees have to be in the US. You have to be manufacturing the products in the US. The 1099 people that you pay have to be within the US. So make sure they have some of these expenses here. Make sure that's all located within the United States when they're doing their activities here.
What if I'm paying a U.S. company that has employees that are, Lord only knows what country they're in, but the company I've hired to do this is U.S.
That gets to be a little bit trickier here. If they are a U.S. company.
That's a real life example.
Yeah, we're getting into that. So technically, what's supposed to happen is we're supposed to look at where that 1099 employee actually sits, right? But as far as the IRS looking at anything or auditing anything, the level that they're going to look into it is that they're going to see where is this company located. And if the company is located in the United States, typically that's good enough. But the full legal explanation is, even if they're a U.S. company, where did that employee that's doing the work, where did they sit? Even if they're a U.S. company and that 1099 person sat overseas, then we're supposed to, exclude, those expenses there. But you don't have to get into anything that technical, with anybody. Once you pass over those clients to Sabeel, and once those come over to us, we'll go into that, technical with them. You don't need to ever get that technical with anybody while vetting them out there. Go ahead.
May not happen, but is there audit protection or assistance of any kind?
Oh, absolutely, absolutely. So anytime that you're bringing any client in through Excel Empire, working with Tax Robot here, we do offer audit defense for all of our clients there moving forward into the future. If they have an audit in 1 year, 5 years, 10 years, or whatever else, rest assured that we will step in. We will defend that audit. That's part of my background as being an attorney here, being able to step in there, meet with the IRS, answer those document requests, and make sure that all of our clients keep their tax credits. And Chris and I will attest that we're very good at doing that whenever we're called upon to do that, and making sure that all of our clients keep their money in audit.
So great question. There's another plant we have. So here's what happened, guys, and I'm gonna piggyback on that as Uche mentioned. We have audit protection. We're gonna have audit protection for R&D, and Uche mentioned Excel Empire. So for those of you who have these CPAs, Ed was the one who created the term. Those are red light CPAs. That's what we call them, red light CPAs. Who's gonna tell you don't wanna leave them? If you come over to Excel with the tax planning, we also have that protection. We have the audit protection for individuals. We have audit protection for corporations. So if you have doubt, you got to remember, we have license. We have license. No one client is worth our license. We're not gonna try to get one client to jeopardize our license. I am here, Jackie's here, we're licensed, we're CPA. Uche is an attorney. Guys, our license is what we work for years. So we just want to give you that assurance when you have that client who's on the fence. Well, we're not sure, what are you not sure about? We're giving you guarantees. And I just wanted to plant that seed.
And as part of our due diligence with Uche actually worked through one of our clients that we already knew was not going to get as much as what somebody else had told them. So we basically sent them that, and that was part of our due diligence. We wanted to see how they were gonna handle this client that thought that they was gonna get, $30 million back in tax credits when really it might have been less than 20,000. And during that process, that was the thing that really made us fall in love with TaxRobot. They're by the book. They are not going to jeopardize you and your client's relationship or your client's future. So I just want to throw that out there, that we do our due diligence before we partner with people. These guys, I don't take phone calls on my vacation. I called Uche on my vacation and told him, what do we need to do to get this started? That's just how well they do their process.
Absolutely, and I'm glad Matt brought that up as well. That was our entire process while creating our original consulting company, Paracore Consulting, and now TaxRobot is doing everything by the book. We know that because we're the ones that are going to have to step in and speak with the IRS and have to answer to this. We want to make sure that everything that we deliver to the clients, we actually have an answer for. So we're never stuck and we're never embarrassed with our clients, and that's why we have over a 95% client suspension rate. With clients coming back to us year over year, claiming the tax credit as well. That 5%, are people that, their business shut down or, they've just stopped paying taxes because they've been in losses for several years. But typically if a client comes to us and they claim an R&D tax credit with us, they will stay with us. And we've even had some of our competitors coming to us trying to use our TaxRobot software right now. And the last sales call that I was on, he said, hey, why I reached out to TaxRobot and why I want to start using you guys is because there's a couple of clients that I've tried for years, calling them, trying to get them to do with the R&D tax credit with me instead of you guys, and they absolutely wouldn't move. They wouldn't leave you guys. So now I want what you guys have, your software, let us use that. So it was a very good compliment from a competitor that wants to work with us and use our software now.
For a small fee.
Oh, of course.
We want these guys to have a tax problem.
All right, so we've talked a little bit about the theory, and I know there's been some questions already about possibly what industries or what type of activities may qualify, but I really wanted to get the chance to talk about specifically what industries or types of businesses you want to target, right? Because we can talk about tax credits all day long, we can talk about expenses, but we always have to remember that the more expenses a business has that qualifies for the R&D credit, the bigger the R&D credit will be. Yes, a lot of businesses can qualify for the R&D credit, but we want to find those businesses that have the biggest credits, okay? So, starting off with the top two here, and this is not very intuitive, especially if you think of the very traditional definition of research and development with people wearing lab coats, but it's going to be architecture and engineering, okay? So why exactly architecture and engineering? And this has honestly been the bread and butter of our business over the past 6 or 7 years. So every single project that an architecture or engineer works on is going to be a custom design project, okay? They are not, in general, they are not mass manufacturing a product, right? Because we do have to be cognizant of, and maybe I'll jump into manufacturing here really quickly. For manufacturing R&D, and this is a little bit simpler to understand, is that the new products they design and put on the market, those are going to be the ones that qualify for research and development. Now, some manufacturers, they've figured out how to make their product and they're just making it over and over and over again. Those activities are what we call commercial production. That will not qualify for the R&D credit. So what we want to do is target those businesses that are constantly in that state of developing something new. And even though architecture and engineering are not making a physical product, they are designing a building of some sort or designing a process of building a building, okay? and every single thing that they work on, every building is unique. No two buildings are the same unless you're, you know, building a bunch of Best Buys or something, right? Sometimes those businesses we do have to pass up and tell them that, you know, maybe they're not a great fit for the R&D credit. But you're going to find that the large majority of the employees at these architecture and engineering businesses are going to qualify. Everybody from the principal who owns the firm, to the engineers who report to the principal who are actually doing the design work, to also the CAD drafters or the drafting support team that are drawing up the ideas that the engineers come up with. Okay, so you're going to see a lot of qualified expenses there. Also, in general, with architecture and engineering, you tend to see the wages of each employee being on average higher than perhaps a manufacturing company. Okay, so architecture and engineering, really powerful there. Now, going back to manufacturing here, manufacturing can have large tax credits because in addition to the employees, we also have qualified supplies. These are the materials that go into their first run production products. So while they're trying to figure out how to make that product, or the prototypes and that they're testing to make sure that it has the highest functionality, performance, functionality, quality, and reliability. Okay, so with manufacturing, we typically have expenses on employees who are making the prototypes, some engineers in-house that are designing those prototypes or designing the new products, okay, and then also the supplies that go into those new products. Now, manufacturing is very broad, right? I don't want you to think of just like a, you know, something that makes a widget, okay? That's my catch-all term for just something that I don't know what it is. Breweries and distilleries. Vern and I had a great conversation last night at dinner where, you know, breweries and distilleries, they are working on the formulations for their new products, okay? Now, the argument we make is that it can't be related to making it taste better, but how do we make the beverage last longer? How do we make it higher quality, that sort of thing? So we want to focus our discussions around that. But any business that's making some sort of product that they're putting out for sale, it's easier to identify like a physical product. That's going to be in the manufacturing space, okay? So manufacturing, new products, great. We just have to be cognizant of when are they reaching that point where they're mass manufacturing something over and over again. That's where the qualified activity will stop. So we identify the expenses before that part. Yes?
So you said it doesn't qualify if you're trying to make it taste better. So why would that not?
So yes, that's a really good point. So the research cannot be conducted for taste, cosmetic, or seasonal design factors. That's
subjective, right?
It's subjective, right? It has to be for the purposes of performance, functionality, quality, reliability. Now here's the catch. Those are four very broad terms, right? So we have to change, like when we have the conversations with the prospects, we have to look at it from that angle. And if they want to start talking about, you know, making something look nicer, that's fine, but we have to get them focused on how is this improving the performance? How are we creating a higher quality product? So we want to shift that conversation. And just because somebody tells you that, oh, it's only because they want to make a product taste better or look nicer, I guarantee you that they're not telling you the full story. That you need to dive in. Well, ultimately, we're going to be the ones doing it. But if you're having, you know, an initial call with a prospect, you want to dive in a little bit deeper and ask some of those tougher questions and get them to open up, because that's something that we do quite often. And some people who don't believe they do R&D, they actually are when you let them know what exactly it is. So that covers manufacturing. Now software. Software and tech companies, I'm going to go ahead and lump them together because they're fairly similar. The startup tech world is ripe for the R&D tax credit. Okay, so think of software engineers, programmers, coders. Okay, those are great businesses for the research and development tax credit. It's very generally accepted that, you know, these guys are doing R&D. There's very little pushback, if any, on that. And the other idea is, you know, we talked about architects and engineers being a little bit higher paid than maybe some of those people in the manufacturing industries. That is definitely true for tech companies. All these software engineer guys are way overpaid, and that translates to a much larger tax credit for these businesses. Now, here's the catch. With a lot of software and technology companies, we have to be aware of where are those programmers located. okay? Where are the software engineers located? A lot of businesses are offshoring that development work. So we need to be very cognizant of finding those businesses that have engineers in-house in the United States. That's really important. And surprisingly, a lot of them are. But some businesses will have teams overseas because it's just very cost effective, and those are not the businesses that we want to target. Yes, they still may have people onshore as well, and we can still qualify that. But yeah, lots of expenses to be found in the software and technology world there. So these are sort of the big 5 industries that we like to talk about. Keep in mind, this list is not exhaustive. There's a lot of other different industries that can qualify, but what we find is that if we focus on these 5 industries here, you're gonna find the largest tax credits. So when you're putting in the time and effort to find the prospects, you're gonna get better bang for your buck. And these guys are going to get larger R&D credits, and they're going to be much happier clients that they're getting, $50,000 to $100,000 tax credits instead of, maybe $5,000 to $10,000. Okay. So, what are some misconceptions about the R&D tax credit? Claiming the R&D tax credit will get you audited. That is false. Obviously,
I think you're saying that's true. I'm like, what?
Well,
that's a great selling point.
Yeah, and of course, I'm not going to tell anybody that nobody gets audited, right? I mean, there's about a 1 to 2% chance that somebody will get audited on an original return. On an amended return, it could be up to about 5%. Okay, so the R&D credit doesn't make you any more or less likely to get audited. However, that's not a blank check to just refer any business over and we just start claiming R&D with them. We do want to be selective about the businesses that we approach with this, because ultimately the people who are going to keep referring you business over and over and over again are going to be the ones that have strong tax credits that are solid, and in the case of an IRS audit, they are upheld. So we do want to focus on that. You must create something new to the world to qualify for the R&D tax credit. This will be the biggest objection that anybody in this room will hear. It's definitely the biggest objection that Uche and I hear whenever we do sales calls with our own prospects, okay? The reality of the situation is, and this is actually built in the tax code, so this is not just me saying it, is that the activities have to be new to the taxpayer and not new to the world, okay? So before 2003, there was a rule in the tax code called the discovery rule, and it did have to be new to the world. So businesses like architecture and engineering, for instance, yes, they're designing a building, right? But that building is not new to the world. People have been designing buildings for ages at this point. Well, in 2003, they removed that rule. It just has to be new to the taxpayer. And so as long as you're creating a product or a process, formula, invention, software, technique, those are technically all the classifications, but we really focus on product and process. Those are the ones that, as long as they haven't done it in the past, they haven't been making the same product in the past as well, that is going to qualify for the R&D credit. Okay, so if you're going to remember almost anything of these misconceptions right here, remember how to combat this objection, because you will hear this more often and almost on every single prospect call, I would say. Not a difficult one to get over if you're able to educate them properly, and that's part of our job as well too. You can't qualify for the R&D tax credit if you make money on products or services. Okay, so this goes back to, and this mainly applies to architecture and engineering. And you may think, well, Chris, these architecture and engineering firms, they are getting paid for the work that they do. They engage a contract. You're saying that they can get a credit on work that they've already paid for? And the answer is yes, they can. That's the most powerful thing about this. It traditionally thought the R&D tax credit definitely applies to those businesses that are taking on these risks, all with their own money and getting an incentive back. But depending on how they're paid, okay, so if they're being paid contingent on the success of their work, and that typically means if they're being paid on a fixed fee or lump sum basis, not time and materials, even if they get paid for that engineering work or the building they designed, they can still qualify for the R&D credit. And all those wages, okay, up to 5 to 10% of those wages being put in there, they can get a tax credit on that. Okay, so not only are they making a profit in their business because they charge for the people that their labor force, they can also get a tax credit for that activity as well. Okay, so that's another one that comes up fairly often. Typically won't come up with manufacturers. They don't tend to think about that. But for the architecture, engineering businesses, those that are focused on like designs of some sort and being paid for their work, you're going to hear that a lot because that's not going to make sense to them. But you can let them know that that is not a barrier to entry for the R&D credit there. So there is one slide here that was missing from this presentation as I was going through all the different iterations that we've given. But the key point from that one slide is that if you're going to identify businesses for the R&D credit, we talked about the industries, but a very quick little litmus test is, and this is not necessarily, if they don't have it, they're not going to qualify. Does that business employ an engineer in some way, shape, or form, or a design professional? Okay, and if they do, chances are they're going to have R&D credits. So even if it's just 1 or 2 design engineers of some sort, you know, that's the focus of. That's going to tell you that they're making some sort of product. They need somebody in-house to design something. Okay, and that's just the easiest way to kind of identify these.
So to piggyback on that, another way we like to think of this is the R&D tax credit is just about technical problem solving.
Yeah.
Is there somebody that's solving technical problems, seeing a problem and saying, hey, here are the 2 different ways that we can solve this problem, and doing calculations or design drawings. So anything that's technical problem solving, we like to go to clients and say, hey, who's on your staff that's technical versus administrative? And have them, you know, split those out, and then those technical people would be the people that typically qualify.
Okay, yeah.
So what about in like new construction, like a builder, if he's got a designer and an architect that he's paying in that aspect, can you use for that?
Okay, yeah, so when it comes to construction, what we have noticed is that yes, construction firms can qualify, and there has been a tradition of qualifying just pure construction firms. However, we have seen recently that a little bit more scrutiny is coming with the R&D credit in terms of just construction firms that simply just build, right? However, the people that are designing those buildings, and also the people at the construction firms, maybe if they're doing BIM modeling or doing some sort of design build, those are the construction firms you're going to want to focus on versus somebody who might be a pure contractor.
Just to ask this question a little more, would the tax credit come from the salary of those people working on that part of the company?
Yes, that is correct.
And that's a good question as well, because the people that are involved, let's say those people at the construction firm that are doing, you know, the designs, you know, a design build firm there, we can qualify those people that are directly involved in the R&D in one level above and one level below. So if there's a supervisor or, you know, a president of the company that's meeting with those engineers and those design professionals, a portion of their salary can qualify as well. So we need to look at it holistically as who is doing the actual technical problem solving, but who else is involved in, you know, supervising or supporting those individuals too.
And I got an R&D with not much, but they're custom pool design. So, and I was told with another company, custom cabinetry, custom anything like that. Is that true or no?
Yeah, I mean, I would say depending on the activities, we have seen like custom cabinet companies qualify before. Now, the trick there is that what we find is that the wages of some of those design professionals, you know, they tend to be a little bit lower, and so you tend to have a smaller tax credit. And then also the installers, the people who are installing the cabinets, which we find to be a large majority of the workforce in those types of businesses, they would not necessarily qualify. So that business would be entitled to a tax credit. Now, would it be worth their time? Depends on how many people they employ. Right. And sorry, I apologize, I missed you in the back.
With ERTC, we had limits on how big a company could be, 500 employees. Is there any limits with R&D?
There are no limits.
Okay, go big or go home.
Go big, go big, go big, go home. Yeah, absolutely. Glenn.
With that type of criteria, what types of medical would we look for and which might be more repetitive, and maybe the same with agriculture?
Yeah, like dentists and stuff when they're doing the molds or whatever.
Yeah, what I would say is that when it comes to dentists, they do have to be doing some sort of custom prosthetics, custom molds, that sort of thing. The activities that are focused mainly on, you know, hygiene and, you know, just somebody coming in for, you know, a routine clean, that activity won't qualify, but it's going to be focused more on the prosthetics side, I would say. You know, again, with dentists, it depends on how much of their business is focused on that kind of activity, right? Because certain practices make more money doing, you know, X, Y, Z. So, you know, it just does depend by practice, I would say.
I know a lot of dentists are doing this implants and stuff like that, but they make the most money on that. Are those considered individual? Are they designing that kind of stuff or not?
That would be a conversation we would want to have with them. Hey, what's going into this process? What are you doing as far as taking those molds? What technology are you using afterwards? Are you doing that in your office? Are you sending that out to a shop that, you know, just mails you back the implant? So it's on a case-by-case basis, but that would definitely be a good prospect to see, say, hey, you know, let's have that discussion and find out everything that's involved in that process.
I would think that'd be a good, you know, get in with one and they didn't know about it.
Exactly, start networking from there.
So, the gentleman in the back.
So, yeah, my question is, what about like municipalities where you've got the city, the guys that are designing all the roads and freeways?
Yes. Yes, because those it does, and you're talking about maybe engineering companies that work with local municipalities, state governments, federal governments. It all depends on what their contracts look like, because if they are being paid on an hourly basis, sometimes that work may not qualify, but let us be the ones to determine that. Okay, so definitely those design professionals who are working with municipalities, yes, you know, send them over. They are definitely people that we want to take a look at.
And the ones that are actually employed by the municipality. That
Employed by the
some are big enough, you know, you get into Dallas and they work for them.
Are you talking about where they are W-2 employees of the municipality?
Potentially.
Okay, so in that case, you know, we wouldn't be getting tax credits for the city governments themselves. It would have to be a contractor of the city.
Do you have a comment on that one, or just?
Well, kind of an extension, if you have a
No,
comment.
go ahead.
So what about a value-added reseller? So I'm thinking of a client, they sell playground equipment for commercial users, parks, municipalities, schools. They don't manufacture the equipment, but they design the play set, they design putting it in. They have a $24 million contract now with a Native American nation. The $24 million in the contract includes installers, so obviously that's not going to count. What about design work as a value-added reseller? Would that be worth a look?
Yeah, that would definitely be worth a look. And Uche and I, you know, we would have to get the chance to talk to them and figure out what the activities are that are going into those designs. But anytime you use the word design, I mean, my interest is piqued.
Okay.
At least.
Okay.
I kind of have a two-part, I guess, you know, being in Florida, what we're getting, I guess, I'm getting a lot of requests or contacts about consulting, which is what I do, but cannabis and the medical industry, I mean, cannabis, I know they do like just getting to know their business a little bit, they do ridiculous amounts of research. They're always on the cutting edge of technology with that kind of stuff.
I mean, they call it experimenting with drugs. That sounds like
R&D. Agricultural, I would assume. I don't know, are there rules for that? Or
Yeah, definitely the taste testers, they definitely.
They love researching.
We do. Gosh, I forgot what the specific number of the exemption is. I think it's 280E or it's something.
280.
280. Okay.
Yeah.
Oh, that was a good guess on my part. Yeah. So 280E. If the activities touch the plant, I need to review the material.
But they're worth a conversation.
They're worth a conversation.
Yeah.
If the activities touch a plant, they're not entitled to a deduction or credit. Maybe Ed, you might know more about
Just
that.
remember the federal government doesn't recognize.
That's what I was wondering.
So that's where you're gonna run into problems.
They asked me that, so I didn't know how to answer that. But
So-
then the other one is they're like everywhere, maybe everywhere now, but all over Florida is the medical weight loss, and they're all coming up with a different
The
specific.
Ozempic guys.
Yeah, well, it's just specific plan for everybody. Like, there's not one cookie cutter program that they're putting every person on. You know, there's tons of research that has to go into that with
Bariatric?
blood work and stuff like that. Not bariatric, but just like they're doing the individual. They put you on like 6 different medical cocktails or whatever. I don't know exactly how the process works, but there's tons of them all over Florida. They're opening up all over everywhere, Tampa and Orlando and.
Yeah, you know, that might be an interesting one to take a look into. It's
Yeah.
not an industry that we've worked with previously.
I just,
but-
I'm trying, some of this stuff
Yeah.
seems to like it relates to the technology and the research side of it, but I didn't know, with medical, so I think both of them sound like are worth at least a conversation.
Yeah, worth at least a conversation, because ultimately, I mean, we may not have had, a certain industry like for instance, the new Ozempic weight loss clinics.
Yeah.
But, and my initial thought would be, maybe it wouldn't qualify, but, I mean, our minds could be changed after we talk to the doctor and we figure out what all is going in it.
Yeah,
right?
like the 2 or 3 that contacted me, they're basically not even using that, they're using more of hormone replacement technology.
Okay.
And they're figuring out like what your body's lacking, and then they replace that through IV drips once a week and different, meds that they're giving you. So basically it's a lot of vitamin, a lot of organic type stuff, but it's very different than, Zempric or whatever that everybody's using, the diabetic thing or whatever. So I feel like there's a ton of research in there, and it's, I would imagine some of that might, but it sounds like it's worth the conversation.
Yeah, worth the conversation, I would say.
Perfect.
We got a guy the company, it's a consulting, but he does IT installations and movie with that kind of stuff, because I guess because he's an engineer and it's technology, but he's doing it for other people. So the people he's doing it for don't get it, but this guy would? Because he's doing it for kinds of business.
So by IT, you mean like setting up the equipment and different networks and
he
things like
manages
that?
their cloud services and stuff like that, but he's also coming in and doing the recommendations on the computer systems and switching them out, updating them, getting them more efficient, that kind of stuff.
Yeah,
I'll show you his website, maybe you can.
Yeah, we can take a closer look at that. Typically, IT would not qualify, from what we've seen, unless there's a bigger engineering
Or if
component
he's developing
into
software for them or something.
Exactly, like saying, hey, I'm developing some kind of software that's going to help connect certain systems or do something internally. If he's just picking solutions that are already created, we're going to use this technology, we're going to use this software, and I'm just going to install everything and troubleshoot it. Typically, that's not something that qualifies for the credit.
I have to find out more, yeah.
Yeah, like the engineers, this is not the building anything, it's tearing down. Environmental engineers were, we've got all these old malls, and I know one right now that's doing the environmental studies to tear down that mall. And is that something that would fit into this?
Yeah, I mean, I definitely think it's worth the conversation. We have worked with a lot of civil engineering firms in the past where they do have environmental engineers in-house. That is a service that we've seen amongst the civil engineering firms. And through the interviews that I've done over the years, I would say that that a lot of the activity can qualify, for sure. It's just a matter of how they're paid, for the most part.
A lot of people in this room are familiar with how the ERTC process works. It's 10 business days. We're having everything done, and then maybe a little bit longer, and then it's about 9 months, maybe longer, before the IRS sends the check. How's the process with the IRS with this one? Is as soon as you guys are done, they can file the amended return, and then the credit can be applied immediately, or do we have to wait, or how does that work? The banking and all that stuff too.
Yeah, that's a great question, and that's the entire reason why we started Tax Robot here. I know we didn't explain much about our current company right now, but we took basically the old consultative approach to the R&D tax credit, and then we added technology, AI and machine learning. And typically when working with a consultant, you have a CPA, the CPA says, hey, you qualify for the R&D tax credit. I don't really do that because that's a specialized service here. Go work with this consultant. You go work with that consultant, they're going to take about 3 to 6 months or so to finish this process and draft all of the documents, and then you file it, and then you're waiting a long time from the IRS to get it back. Now, with our platform, with the technology, we get the client on, we create a login, they're able to just use the internet to pull in all of their payroll records and all of their supply records. They answer a few questions. You can do this process in as little as an hour. And then with our generative artificial intelligence, it generates all of the documents on the spot. So immediately when they're finished, we do always have a human being. We have an entire team of R&D tax credit specialists that are reviewing all of the outputs from the software there, and then the documents are generated, and then you can file that right away. delay. So typically 1 hour, 1 week, if they have to go back and get all of their documents, let's say they have to jump through some file cabinets or look through online systems, it might take them up to a week. And then right when they're done with that process, 24-hour turnaround time, we have all those documents you can hand to the CPA there, and then they can file for their tax credits.
That was gonna be my question, is what is our start process through Excel? So, you know, thinking about several different people, am I setting up an R&D call with you first, or are we doing a discovery call with you?
Everything starts with the discovery call. But it's not necessarily with me. They'll explain. We've brought somebody in-house that's going to do those discovery calls, and they work directly with team members.
Yeah.
That's
so Sabeel, if you wanna come up here.
But are we going to the website on Excel Empire?
She'll explain.
So what we want you to do is we want you to contact Sabeel, and she's working with Excel Empire here. She's going to receive all of those referrals in-house there for Excel Empire, and then she's going to do that initial review of the client just to see you know, if they do qualify there, and she'll work with you to let you know what type of information that she'll be collecting from the client there, and from there the clients that she believes that qualify, she'll pass that over to us, and then we'll go ahead and complete that process. But Sabeel, if you'll explain how you want them to get in contact with you and pass on.
And where does the client actually get involved in it?
After we do the discovery call, like for example, hi, I'm Sabeel.
Hi,
I work for Excel and I also work for Remap. I work for both, and I'm working with, you know, this team as well.
So who gets the tax credit? You or iRobot or Excel?
The client gets the tax
No, for you.
I get the satisfaction of getting you the credit.
Okay.
Trying to get you the credit and exploring to see if I can find it for you. You could email, you could call, or you could actually go on Excel's app as well, and you could schedule an appointment with me, and I will do a discovery call. It's about like 6-7 questions that I ask. I also inquire about the website as well, because we want to see if you do qualify with just those 6-7 questions, and also your website. Then I see if you do qualify, then I hand it to them, and then they go on from there and they finish the process for you. Then after that, then they create that, and then Mr. Hubert will have a relationship with IRS and make sure that it's processed as well.
And where do we find your appointment calendar?
It's on Excel, on the app as well. But before you leave, I could also give you my information.
That'd be good.
By the way, she also, I think I've got like 6 different R&D things that are in the pipeline now, and 8. Oh, thank you. Whoops.
She's a numbers girl.
But she
Yes, I am a
she
numbers
goes
girl.
through and she fills out everything in our CRM for you, so you don't have to like, oh, I got to contact TaxRobot and figure out where this is at or did they qualify. You're able to just log into your CRM, thanks to Matt, and she has all that information in there, so you can see they've done the discovery call. Yes, it's been passed on to TaxRobot. They've done the discovery call and it is abandoned. So you guys can down, or you can work with her and say, hey, before you abandon them, let me know so I can have a conversation with them. So, yeah.
Normal phone call takes, normal discovery call takes how long?
Well, it doesn't really take that long. I think the last one I did took about less than 30 minutes, 25, 30 minutes. Unless they have more questions, you know, but the questions are like 6 to 8 questions. Then we go back and forth. I answer as many questions that I can, and then that's it. 25 minutes, I would say. Yes.
So I was in a mastermind the other day. I told Matt, and literally the lady sitting next to me, her dad has an engineering firm. All they do is like special R&D, like actual projects that are slam dunk. So she was talking to another provider. They prepare the documents the way you're describing, but they wanted a fairly substantial fee to give them the documents to submit. How does what does it look like from the client side? Are there fees involved? Like I know ERC, we have the $2,500 fee. What exactly does that part look like for the client? Like what are they out of pocket, if anything?
Yeah, it's a percentage or whatever.
Like are we just having them sign a document saying we get a contingency of what is recovered, or what does that look like?
Yeah, it's definitely going to be a percentage, you know, of that tax credit there. And we do it by a percentage there because we never want to charge more money than they're actually getting back in tax credit. Once they come on board the Tax Robot, they're not going to pay any type of exorbitant fees. We have a $250 deposit just to get on our platform there and get started. That covers, you know, all of our cloud computing and all of our software fees. And that $250 is applied to their final bill. But we don't charge anything until we're actually done with everything and we have all of those documents ready to hand to them. And at that point in time, we'll charge a percentage of that tax credit that we identify.
That percentage is?
So,
Typically, it's going to be 25% tax
but
credit.
you collect that up front?
Yes, that is correct.
Got it.
Mhm.
All right, thank you.
Is that $2,500 or is it $250?
$250, yes.
Is that returned to the client if they back out, or you guys say you guys don't qualify? We've done our work.
Absolutely. So we'll only collect that $250 once we've determined that they do qualify and we're ready to begin the process.
So I'm on the app now, where am I finding this? Not on your phone.
It's also, yeah, it's also on the website underneath the R&D tax
Oh, the
credit.
main app?
Go ahead.
Yeah, the follow-up question is, I'm thinking through that, so they pay the fee. I assume there's a guarantee that if for some reason it's rejected, they get the fee back, or?
Yeah, you mean after we're done creating the documents and they submit it to the IRS?
Correct.
Yes, we do offer a guarantee, you know, on all of our tax credit studies. But the thing about it is using our process of identifying whether the client qualifies, going through that legal analysis and creating the documentation. We have 100% acceptance rate in the over 8, almost 9 years that Chris and I have been doing this. So that just doesn't happen where the IRS rejects any of our tax credits that we submit.
Can we get a PowerPoint like this one? I've got some really difficult clients that, you know, they're like, I don't qualify, or I've worked with
Yeah.
someone else, they said I didn't qualify, and I mean, they have 400 employees, and
Yeah.
I know they qualify.
Absolutely, we can share this presentation with you. We can also share some of our other materials, you know, some of our blogs or other information that's on our website right there, things that you can distribute to your clients and you can use to educate and have that discussion with them.
Yep. I think also I did create an R&D course as well that's full with like quizzes, feedback questions, and multiple choice tests as well. I think I can share that link with Excel Empire, and they can share that link with you guys to where I mean, if you take this course, you will know more about the R&D tax credit than most people, for certain.
And this video and that can be uploaded onto the university and we can make it available.
I have just a quick question. A company who, like now, they applied for it and they get the tax credits, and then year 2, 3, 4, 5, do they go through the same process?
The same exact process every time. For example, right now we're coming to the end of the year. All of our clients that have claimed R&D tax credits in the past, we give them a call. Hey, are you finalizing your books for the year here? Let's go ahead and get started with 2023. And we do the same process every single year. It is a permanent part of the tax code. They can claim the R&D tax credit. Go ahead.
I've run across large corporations that say they're already doing it. Is there any reason for them to look at you if they're already doing it?
Absolutely. There's absolutely a reason to look at us if they're already doing it. We have, and it all depends on who's doing it as well. If it's like a small, you know, CPA or shop that's doing it, we've had several clients that have come over to us where, you know, the individual, the consultant or the CPA wasn't doing it properly. One time we tripled somebody's tax credit because they weren't doing the process, you know, properly there. There's some expenses, there's some things that they missed in the analysis there to where we were able to better assist them. Not only that, our process is much quicker. Like I mentioned, 3 to 6 months with a consultant. We do it in 1 hour to 1 week typically. So it's just a lot more thorough. We typically can identify a higher tax credit amount. We do back up everything with our audit defense as well. So absolutely telling your client, hey, even if you're already doing it, what we do offer is we offer a free audit of that competitor's tax credit study. And we say, hey, if we come in there, we take a look at the study and we say that competitor, they're doing everything right. We're honest people, we'll say, hey, they're doing a good job already. We can't help you out any. Or if we find something wrong, or say, hey, we can find you more tax credit than that, we can do it better, this documentation is not good enough, when the IRS looks at this, they won't like it, then we'll tell them that. But that analysis is completely free, so you can tell your clients there, hey, they'll do a free audit, just let you know what you're taking a look at there.
And one more piggyback on Uche, and I just want everyone to be aware, within Tax Robot, Excel, Remap, we have control of timelines. Like Uche just said, we can cut 6 months down to 1 week. But here comes the heavy part. When we have done everything and it's submitted, guys, we cannot control the timeline because it goes to the IRS.
But they just hired 87,000 new.
Yes, but you also have to talk to your congressman. That was the first. 40 billion was taken back. 40 billion was taken back. They just hired 5,000 people to answer the phones.
Customer service.
And I want you to listen to what I said. Answer the phone. I didn't say they hired experts.
You didn't say answer questions.
There you go. There you go, Eric. Thank you. To answer the phones. So why I'm saying this, it's not to create doom, but I just want to establish the expectations. Within our organizations, we can tell you timelines, we can control that, but we cannot tell you what the IRS will do. Because what is happening with the IRS right now, I'm just being real, I'm just being transparent. The IRS is not functioning as an independent organization because there are a lot of politics involved. So, I just have to talk about the elephant in the room. So that is what's happening. So that's why the process is. So the pandemic, we came out of the pandemic, well, we're not fully out. The IRS is still backlogged from 2019. So I just want you guys to be aware of that. Over 5 million tax returns were not processed because they were sent in by paper. When it went in by paper in March 2020, the people were just told, we shut down, pack your stuff. No, don't pack your stuff. Leave and go home. So where were these tax returns? They're in paper, they're in folders, they are on desk. So I just want you guys to know, because I know sometimes you call, you talk about, we process this, we process this. One of the number one challenge also, I'm just taking this opportunity, that entity selection. Because a lot of you are confused with that. You're getting multiple letters. Your S-Corp was not accepted. You get that letter 1 week. And then the following week you get, your S-Corp was rejected. It's the same kind of things. We can only control what we can. So I just want to share that expectation with you guys.
Yeah, and with that in mind, so it's great you're taking a week or so, but then what are we finding is typical timeline for the audit or for the amendment?
Yeah, so that's a great question. I know earlier this year they have basically changed the way the R&D tax credit review process is going to work. On amended returns now, you do have to file that documentation. So that is something that we produce right alongside, with the forms there that you use to file that tax return. Our client that got the quickest refund this year was in 8 weeks. That's not normal. I would say that's the minimum.
I couldn't believe it when I heard it.
We're like, that's great. If the IRS are looking at those documents that we generate and, they got it back within 8 weeks, we were totally stunned. I would say that is the minimum amount of time. I would say a better expectation to give to your clients is 6 to 9 months. Wow. At this point in time to get back their refunds. But like Chris mentioned, there's a lot of different ways that we can utilize this credit. We can utilize it on originally filed returns. returns. We can offset future estimated, taxes going forward into the future. We can offset payroll taxes. So there's a lot of different ways that we can utilize that right now instead of just waiting for amended returns to come in there, and we'll help the client strategize on
So that's
it.
immediate upon filing.
I was gonna say,
That's immediate upon
wow,
filing.
Yeah, and
so they don't
last-
have to necessarily
Yeah,
wait
and
for
last
them
note
to-
on that, especially, with amended returns, yes, you do have to wait for a refund check, but if you're doing it on original returns, and if they're doing it on original returns, there's a chance that it just reduces the amount of tax that they have to pay, period. So you're actually effectively using it immediately. And then also, if you carry it forward to the next year, for instance, say for instance they didn't have much on tax, well guess what? That year, even though you have $30,000 of tax credit, that's $30,000 of tax you're automatically depositing less of at estimated tax payment time. So people can almost immediately get it back, especially on an original return, provided that they plan properly.
Yeah. And y'all help them with that.
Yes, that's what Excel and Remap helps.
Is there a separate fee for the amended taxes or whatever, so we're paying the 20 or 5% that, and then we're hiring you to do, or they're hiring you, right? And then there's a separate fee for that?
For the amended returns, yes. But the document that we provide, they can take it back to their original CPA. So yeah.
Somehow this hour presentation has gone an hour and a half. I don't know what happened. So, if you have more questions, just grab them, grab Savio, grab me, somewhere else. We want to make sure that people can go enjoy their day. Thank you guys very much for presenting. We'll make sure that Savil's contact information is available. I don't know how much Wi-Fi or work I'll be doing, but we'll get that out.
Like an email blast.
At least, yeah, at some point, so I'll get that sent out. I need to see Jim Hartman, and I need to see Willie before you leave.
Uh-oh.
It's not bad.